Welcome to ISE's FX Options Weekly Outlook, a weekly outlook on the US dollar versus the major currencies, hosted by Jason Ayres, a top industry instructor and founder of OptionSource.net. Learn to trade your views on the strength or weakness of the US dollar.
Hi there and welcome to the ISE FX Options Weekly Outlook for September 8th to the 12th. I'm your host, Jason Ayres, founder and president of OptionSource.net. As always, we're going to start with a look at a weekly chart of our U.S. dollar index. This is a great way to gain some perspective as to how the U.S. dollar is trading against a basket of currencies. As you can see here, the U.S. dollar has been defying gravity. Last week we suggested that we may see a possible rejection at the 77 to 78 focal area here. Now we did see a slight consolidation at this level, which is more easily identified on a daily chart. As Patrick suggested, we do have a strong trend to the upside in place with the U.S. dollar, and this is actually confirmed with our MACD trending strongly to the upside and our RSI confirming this. The suggestion was that a break through that 77 to 78 focal area is likely to play up into that 80 to 82 level over the next little while. It is important to note, however, that we are playing into a 50% retracement level, which is identified by looking at the larger picture on the U.S. dollar index here. A rejection off of this 50% level, which represents a fairly significant resistance, is likely to see us play back down and perhaps consolidate in at the 77 to 78 level. So while the window for a possible continuation up through to that 80 to 82 focal area is still in place, we need to be cognizant of the fact that we are playing into what, from a technical perspective, is considered to be a significant resistance area. With that in mind, let's take a look at our ISE currency pairs. We're going to start off first with the CDD, US versus the Canadian dollar. We identified a consolidation which represented a 38% retracement down into that 104.5 to 105 focal area, which bounced off and subsequently found resistance at the 107 to 108. Now, a break through that area would still see us targeting the 110 to 111 area. We have to look at the possibility that we are now starting a little bit of a retracement back into that 104 to 105 zone there. You can see with our MACD here that we've turned up but then kissed off of our longer signal line there. Our RSI is now starting to turn down as well, suggesting a loss of momentum, which leaves a window open, as I mentioned, for a retest of that 104 to 104.5 to 105 level down in here. Okay, let's take a look at the YUK, the US versus the Japanese yen. We've been focusing on that 110 to 110.5 level as being an area of significant resistance. We did see a rejection and a bounce off of that area to play back into the 108.5. It was suggested by Patrick last week that a break below this 108.5 focal area would likely see us play down back to that 105 to 106 focal zone, which represents a significant area of support. Now, as you can see, we've actually bounced off of that support level and now find ourselves playing back up in towards that 108.5 focal area. If we look at our MACD, it continues to trend strongly to the downside. However, our RSI is suggesting that there is a loss of momentum to that move to the downside subsequent to that significant bounce on Friday. So the potential for this to reject off of that 108.5 level to come back down to the 105 level, to 106, must be recognized. Now, in saying that, if it does continue on and through that 108.5 level, then we would certainly be focusing on the 110 to the 110.5 level. This now, as mentioned, becomes an area of resistance for any sort of future longer-term moves to the upside. Let's have a look at the EUI, the U.S. versus the euro. Again, significant strength on the U.S. dollar against the euro as we continue to push to higher highs. Last week, we recognized that 68 to 69 focal area as being an area of significant resistance, expecting a potential retracement or rejection at that level. However, the suggestion was made that a break through that would likely see us target highs into the 71 to 72 focal area. Now, in saying that, we've seen the MACD attempt to cross down. However, it has kissed and now appears to be pushing higher and continuing to trend higher. Our RSI is also doing the same thing. One thing to note with respect to what's happening on our lower indicators is that, as you can see here on our price chart, we've moved into higher highs. However, we're seeing a significant pattern of what we refer to as divergence in our MACD and also on our RSI, suggesting that the level of momentum into these highs is starting to decrease. So with that in mind, and looking at that 70 area there is actually in the bigger picture being also an area of resistance, we can look for the potential for rejection here and a move back down in towards that 68 to 69 level there as an area of support before any sort of further continuation through these levels into the higher highs. Well, last week, Patrick also noted the significant rally that has been taking place in the BPX, or the U.S. versus the British pound. We were looking at the 54 to 54.5 as being a very significant focal zone and suggested that any break above that, we would likely be able to target into the 56 to 57 zone, which indeed we've been able to do. Now, in saying that, we have to recognize that in the bigger picture, that 57 to 58 area there represents a resistance in the larger time frame. Now, any sort of rejection off of that, and we're likely to see a pullback down into that 54, into that and 55.5 area there. So we could conceivably expect a little bit of backfilling with respect to the significant move to the upside that has been taking place. Now, in saying that, our MACD does appear to still be trending strongly to the upside. Our RSI suggests continued momentum to the upside. What we do need to recognize, though, is that as these prices, this pair value has been playing into those higher highs, we have to note the divergence that's taking place in this MACD. So although our trend in the MACD line seems to be to the upside, our histogram is suggesting some caution as we play into this resistance focal zone up in the 57 to 58 area. Okay, let's have a look at our last pair value for the day. This is the AUX, the US versus the Australian dollar. We did see some consolidation down in at the 116 focal zone. However, a break through that has seen us target into the 124, which actually represents a measured move over that longer trend. Now, in saying that, a rejection off of this level here, which seems to be characteristic of the type of candle that we see, noting that we played into some higher highs above the 124 but pulled off the close down lower of that. A rejection in that area would likely see us target back down into the 116 focal zone, which happens to represent a 38% retracement on that bigger picture move. Now, our MACD suggests a continued trend to the upside, and our RSI also suggests continued momentum. But as with our last two currency pairs, we have to note the higher highs being made with respect to the divergence that we're seeing on our MACD. So caution should be taken as we look at this. However, any sort of break through this 124 level here, and our next measured target is up into that 127 focal area. So folks, that's been your ISE FX Options Outlook for the week of September 8th to the 12th. I've been your host, Jason Ayres, president and founder of OptionsSource.net. It's been a pleasure. We'll see you here next week.
Thank you for participating in this week's session. Please join us again next week. For more information about Jason Ayres and to sign up for free FX Options trade alerts, just visit www.optionsource.net. To To learn more about ISE FX options, including our weekly webinar series, visit us at www.ise.com/fx. ISE FX options can easily be traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.